So Jing came from the 7126, the AS paper from June 2019. She's in the process of completing her books of account and preparing financial statements for her business for the year ended 30th of April 2019. She rents out part of the business premises, and the following information relates to the rent received. At the 1st of May 2018, the rent owing was £400. Now, this is not rent owing by Jing, this is rent owing to Jing. So this is accrued income at the end of the previous year at 30th of April 2018. So we're going to need to put that in on the debit side. It was owing at the end of the year. She'll have received it in part of this money that's been paid in during the year ended 30th of April 2019, but it relates to the previous year. So on the 1st of May 2018, we've got a BAL BD. I'll just put in brackets there. It was accrued income. So it belonged to the previous year. So it's £400 brought forward to go in there. During the year ended 30th of April 19, the rent received and paid into the bank totaled 6,150. So 30th of April 2019, we're putting that on the credit side. Remember the double entry: when we receive money, we debit the bank account, we credit the relevant account. So in this case, it's an income account. So we would expect the bulk of transactions to be on the credit side because rent received, remember, received past tense relates to income always, not to be confused with receivables, future tense, which is your trade receivables, people who are going to pay you at some point in the future. So that's the rent received dealt with. Now, at the end of the year, the rent paid in advance was £900. So of this 6150 that's been received during the year, £900 of it is prepaid income. So we need to debit the rent received account with the balance carried down. So this is prepaid income. And remember, at the end of the year, any T account that's to do with the income statement, so any income and expense accounts, need to be balanced off with a transfer made to the income statement. Now, because obviously this is an income account, we're going to be debiting the T account, the rent received account, with the balancing figure. So that's a BAL fig. So whatever's in here, so the 6150 on the credit side minus the £400 accrued income that belonged to last year, minus the £900 prepaid income that belongs to next year, means that we're putting a total of 4850 onto the income statement. Now, ideally, I'd have left a line if I'd been a bit more organised and put that in before I put the balance carried down, but it's a bit tricky with this one because you can't work out this balance until you've dealt with the prepaid income. Now, with anything to do with T accounts, it usually tells us to balance. It says here, balance the or show clearly the amount transferred to the income statement and bring down any balance on the 1st of May 2019. So both sides now add up to 6150, and it's going to be that balance that we bring down on the 1st of May 2019. Balance brought down, it's the prepaid income, and that will start off the next financial year because that £900 doesn't belong to this year. It belongs to the year ended 30th of April 2020. Okay, so that's the first part done. Second part, then, it tells us that Jing has a long-term loan, so that's a liability. So a long-term loan account is a liability, be on the credit side. And the following information relates to the loan and the loan interest account. And we've got the loan interest account down here, which is going to be an expense. So the transaction is generally going to be on the debit side. So on the 1st of May 2018, we've got a liability. The loan outstanding was £10,000. So we need to bring that down on the credit side because it's a liability. And we had loan interest owing of £200. So that's an accrual brought forward, and that's going to be on the loan interest account. So the BAL BD there is an accrual. So it's £200. It relates to last year, but it will be paid in this financial year. During the year ended 30th of April 2019, only one payment was made. This was dated the 31st of December 2018 and was for £4,467. This was a repayment of capital, doesn't tell us the amount of the capital, and the interest due of 467. Well, if the total amount paid was 4467, that means that the capital must be £4,000. 4467 minus the interest due. So we're going to need to split this payment between these two accounts. So on the 31st of December 2018, I assume it's paid through the bank, or it doesn't tell us. We've paid off capital, so we've reduced the amount of the loan by £4,000, and we've also paid the interest due. So again, put the bank there, £467. Okay, the final piece of information is that at the 30th of April, there was £80 of loan interest owing. So that means we need to do an accrual at the end of the year. Remember, accruals increase the amount in the account. So we add an accrual. So the BAL CD is an accrual carried forward. So that's on the 30th of April 2019, £80. So the last thing, it's not very clear actually, £80. The last thing we need to do is make a transfer to the income statement. So that's for the total amount of the loan interest. So we've got 467 and we've got 80. So total of 547 on that side, minus the 200 means that the figure to go on the income statement for loan interest paid is 347. And then what we need to do is make sure that we bring that accrual down. So the BAL BD at the start of the next year, £80. It's going to be paid in the following accounting period, but it relates to the year ended 30th of April 2019. The other thing we need to do is balance off the loan account at the 30th of April 2019. Nice easy one. 10,000 minus 4,000 leaves us £6,000 outstanding. We'll balance that off, make sure both sides are equal, and the 1st of May 2019, the balance brought down is £6,000. Okay, so that's part 2 of that question. There is a part 3. It tells us that Burden Limited is a credit customer of Jing's. Well, that means that they are a trade receivable. Trade receivables, if you remember, are on the debit side. They're an asset. They're recorded under current assets in the statement of financial position. So the following information relates to the Burden Limited account. At the 1st of May 2018, Jing was owed 850. So we need to pop that straight in on the debit side. So trade receivable balance £850 owed to Jing. During the year ended 30th of April 2019, Jing sold £1,240 worth of goods to them. So remember the double entry for sales, credit the sales account, debit the customer. So we need to debit the customer here with 1,240. The other half of that entry is going to sales. Okay, that's that one dealt with. And then we received checks totaling 1,450 that were paid into the bank. So debit the bank account, credit the customer account here, 1,450. Then it tells us that Jing has been informed that Burden Limited are in liquidation. That means they've stopped trading, and she's unlikely to receive the amount she's owed. She has decided to write this off as an irrecoverable debt. Now remember, irrecoverable debts are expenses on the income statement. Okay, so what we need to do is balance this account off, find out how much is left. So the 850 plus the 1240 means we've got 2090 on that side, but they paid her 1450, so they actually only still owe her £640. So at the end of the year, we're going to write that off to the income statement as an irrecoverable debt. And that account now balances. Thanks very much for watching. If you've enjoyed the video, don't forget to like and subscribe. Thank you.